Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. And that's going to be Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking DocuSign. We've seen a reset in the shares. This stock traded over $314 a couple of years ago, hit a low just below 40 bucks, but we've seen some nice moves to the upside here. Has this reset taken care of maybe the over-exuberance in the shares during the pandemic? And what kind of data are you guys seeing on LikeFolio?
Yeah, we think so. DocuSign, it's most known for its e-signature product, right? So this makes sense that during the pandemic, this was a company that really thrived and really grew because all of a sudden, it was allowing businesses and consumers to conduct more business online, which is what consumers needed. But we've since seen that growth start to temper, and I think a lot of this is to be expected. But whenever we look at, DocuSign moving forward, we're looking at really two things, especially heading into this quarter. And the first is that purchase intent mentions, and you can see these mentions on the green line. And what this is most indicative of are really those first-time users, so people talking about signing up or adopting or businesses using DocuSign for the first time. And you can see that peak in 2020. And since then, just some even tempering, so down about 18% year over year. And what's interesting is when we look at just, web page views, so people who are going to explore, its website, potentially, adopt its products, those views are down by almost the exact same amount, by about 19% year over year. So this tells us that growth is slowing down. And while this is expected, it may not necessarily be what the market wants to hear moving forward. I think that one positive sign, though, for DocuSign on a long-term perspective is, we know the majority of its revenue is derived from subscriptions. And when we look at our metric for consumer happiness, we see that consumers are increasingly happy with DocuSign's product. The happiness levels have improved by about 6 points year over year, around 77% positive, which is pretty high. And really the only peer in our universe we have to compare DocuSign to is Adobe Sign. And when we look at Adobe Sign versus DocuSign from a volume perspective, from a demand perspective, and from a happiness perspective, DocuSign is outperforming. However, the caveat is this growth is slowing down. We saw it last quarter, and we're watching this continue into this quarter.
Megan, this company, the good news is inching closer to profitability, and they're adding large clients. By that, people that spend more than $300,000 a year on this. And what you mentioned in your first few words there, the stickiness of this product. Once you try this product, you don't leave. Everyone is pretty happy with it. And think about this, the dollar-based net retention. That's one of the indicators of slowing growth, but it's slowing from 125% to 108%. So still over 100% of these of theirs. So the stickiness of this product, I think so much got pulled forward, and including the price of the stock and the demand for this company. But this is a company that eventually is probably going to be profitable. It seems to be on a path there. It just, if you take some of the volatility out of this product from when it was brand new and popular during COVID, it's actually growing at a nice pace, isn't it?
Yeah, I think that, it's still posting revenue growth, right? This is still a company and it's taking steps, at least in terms of profitability. I think it's reducing its headcount, it's restructuring a bit, trying to be more efficient. And then overall, its value proposition to consumers hasn't changed. When we look at some of the different business trends that we track, improved business efficiency is one of the top growing trends that we see, as businesses are trying to be more efficient. This is just normal practice, and this is something that DocuSign offers, and it's making moves to try to help its businesses be more efficient. I know that one thing that it's touted is this elastic signing, so it's just more intuitive from a business perspective, a user perspective. It uses more advanced logic, and we're starting to see that have some, impacts on that overall level of consumer happiness, that consumers are reporting a better experience when they're using on the business side and then also on the consumer side to conduct business. I think another important integration is, this partnership that it has within Microsoft. That could be another avenue for future growth, and just that stickiness when you kind of integrate it into that Microsoft workflow. So I think it does have avenues for growth, and I think for us, from a long-term perspective, it's positive to see those happiness improvements. But from a short-term perspective and near-term perspective, we're not quite certain that this is the quarter that the company is really going to turn the corner and gain a lot of trust from the market, perhaps. At least whenever we look at those overall levels of demand and those, the web visits, like I said, whenever we look at our metrics from a correlation perspective to revenue, those tend to be the more correlated, and we do see a bit of a slowdown. So it's a little bit of a mixed bag when you look at our data, because we do like the decisions that the company is making internally, and we do see it having some improvements, at least to consumer sentiment, but we are still seeing a bit of a slowdown in that growth that could still trickle through this quarter as well.
Yeah, you make a great point there, Megan, because the economy is still doing pretty well at this point, but the transactions that DocuSign's used in a lot of endeavors is, whether it's commercially with property, right? It's residential, it's lawyers, trying to figure out deals, and that's slowed down quite a bit. But it seems like the stock price, according to your charts here, on purchase intent, as far as first-time users, we all know the happiness is good. I've used it. It's amazing product. But at the same time, stock price seems to really be underestimating, maybe what data that you guys are showing. And do you have an earnings score on this one?
Yeah, so heading into earnings, our earnings score for DocuSign is a -16, which, in our world, that falls into the neutral camp. It's leaning a little bit bearish, but, you acknowledge this, that whenever we see this a little bit divergence between purchase intent and the stock price, like you mentioned, the expectations might be low. So we think the bar is set a bit lower, even though it has rallied just recently. We think the bar is still low, that, maybe investors are expecting a slowdown in growth. However, we're not necessarily seeing strong enough data to take a stab at upside yet. So for us, we're neutral into earnings, but on a long-term perspective, we do like how we're seeing things change in terms of sentiment for this, and we think that this could be, a nice longer-term bet if you are looking for an upside bet.
Yeah, guidance from companies has been key. Maybe looking forward to some guidance from this company to profitability. All right, great stuff as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, Vice President of Research at LikeFolio, breaking down the data here on DocuSign.